Barbara and Montecito. My name is Daniel Zia. I'm the founder of Zia Group here with eXp Realty on the Central Coast, and I'm here as part of our monthly commitment as a team to keep you, our beloved community, up to date on what the real estate market is doing. So we put out a monthly real estate market update. This is the monthly real estate market update for October 2021, where we're going to go over all of the statistics for September that are now in our hands. We have that data, and we're going to walk you through what the market is doing. This covers specifically South Santa Barbara County, from the areas from Carpinteria to Goleta. We're going to go over single-family homes. We're going to go over condos, and we're also going to focus on the luxury market of Hope Ranch and Montecito. So to start off, as a summary of what the real estate market is doing as a whole this year, it has still been one of the greatest real estate markets of all time. I think it might be a little bit of a toss-up depending on what statistic you look at and who you talk to, whether this year or last year is considered the absolute greatest real estate market of all time, but it has been a very strong real estate market as a whole. Now, we are starting to see the market show some early warning signs of some kind of shift happening, and I actually think that's a positive sign. The market we've been in has been so crazy. It's not really a healthy market. It cannot be sustained. The rate at which prices have been appreciating, the number of multiple offers we've had on so many listings, buyers getting frustrated, and we've not had enough homes to sell these buyers that have been waiting in lines to buy properties. So that's what the market's been. It's really been unhealthy. It's been just a frantic pace, and so it's starting to slow just a little bit. And when I say it's starting to shift or it's starting to slow, I'm going to dive deeper in that. But the long and the short of it is that we're starting to see an increasingly greater percentage of different sales outcome. And it's still, if you talk to most real estate agents, I don't think they're going to be able to fully articulate this or share many examples, but we do so many transactions as the top real estate team in the Santa Barbara and Montecito area that we're just a part of more negotiations week after week after week. And so we just feel some of those ebbs and flows of the market even before the sales statistics reflect them a month or two later. So I'm going to go ahead and dive in there, but from what we've seen in the last month, we're actually have seen that compared to the same month in September in 2020, our market was not as active this last month compared to the previous year and the same period of time. So we saw both a decrease in closed sales activity as well as a decrease in pending sales activity. Those are the homes that have just gone into escrow. So that's the most reflective of what the market is doing today versus what the market may have done a month or a month and a half ago when those negotiations were happening and those homes were going into escrow or going pending. So micro, the last month's market was a little bit slower than the year before. Macro picture, year to date compared to year to date last year is significantly stronger. Prices are up year to date over year to date by about 27%. So we're seeing some still positive signs in the market, but I'm going to dig deep with you and just walk you through exactly what I'm seeing in the different sections of the market and how it may affect you in your home ownership, home values, home purchase, or home selling decisions here coming in the coming months. So let's go ahead and dive in. If you are not currently on our website watching this and you saw this video on social media, you can always go to zgroup.com, go up to Learn, go down to Housing Reports, and we put this out month over month, and this is the October 2021 market update. So first, this is for South Santa Barbara County. These are the single-family homes that we're going to cover first. As you can see here, the number of new listings that came on the market has decreased by 8%. And the number of sold listings, these are the homes that actually closed escrow last month over October as opposed to September 2020. We saw 24% fewer homes close escrow, and that just further emphasized what we talked about last month in our market update, that we started seeing that shift happening in the pendings, and you're really seeing that reflective now in the closed. So as far as single family homes, we're seeing an average sales price of just over $2.5 million, which is actually just a little less than what it was October last year. Now, that's not saying that prices have gone down compared to October last year. It just, with the limited number of limited sample size that we had this last month, we actually had some lower sales happen compared to last year. Now, The big difference is how quickly homes are selling. Last year, homes took quite a bit longer to sell than this year in the same period of time. We actually had an 18 average days on market, which is a 68% decrease. Now, here's the statistic that we focus on every month. It is months of inventory, also known as the absorption rate. It's how many months or how many weeks would it take to sell all of the available homes currently on the market at the rate at which homes are selling. So we have 1.12 months of inventory right now. So while the market is showing some early warning signs of doing some interesting things, maybe shifting, now 1.12 months of inventory is the lowest historic months of inventory we've ever had at any time period in the Santa Barbara real estate market, with the exception of April of this year, was slightly lower. I think it was 1.04 months of inventory compared to 1.2 months of inventory. So even though I'm saying, hey, I'm sensing there's a little bit of a shift coming, the sky is not falling. It is not a major shift or a rapid shift. It's just kind of slow and subtle. And the big difference is, until we start seeing this absorption rate or these months of inventory go up significantly, we're not going to see a massive change in the market. We're just going to see just kind of these subtle nuanced change. Also, to put this in perspective, 1.12 months of inventory, when we compare that to 2020, at the same time period, we had about 3.5 months of inventory. And when we compare that to 2018 and 2019, back in September, they had about 5 months of inventory, both of those years. So just to boil that down, what that means to today is it would take about 1/5 of the time to sell all of the homes currently available for sale now compared to 2018 or 2019 at the same period of time. Pretty incredible. And again, it's a strong reflection of still how strong our market is, even though we're still seeing some subtle shifting going on. Condos, I'm not going to spend a lot of time on condos. One of the factors that you can think about here is you did see an increase in sales price reflected on the monthly statistics. I'm going to go over year-to-date statistics, which I think are a stronger and more accurate gauge of that, but it did go up about 10%. The average sales price of a condo for last month was just under 1.1 million. You can also see the sold listings went down. The average days on market went down dramatically. We still have very low months of inventory. Now, digging into the luxury market of Montecito and Hope Ranch, we continue to see a very, very strong luxury market. To put that into context, we had 15 luxury sales over $5 million, which is huge. I still remember a handful of years ago where if we had 3 or 4 sales above $5 million in a month, that was a big luxury sales month. So the last year, we've just been in a whole other echelon when it comes to the amount of sales activity above $5 million. Also, when it comes to $3 to $5 million properties, we've seen a total of about 18 sales last month in that $3 to $5 million price category, which is still considered the luxury market. So the highest sales price was 788 San Ysidro Lane. That sold for a little over $13 million. And for condos, there was one on Recon Point Lane for $6.3 million. So we're still seeing some great luxury sales activity. You can see here that there's 34 new listings came on last month. That's a 39% decrease. Sold listings are down, but homes for sale are down, right? It's this kind of caveat where we're seeing less sales activity, but we're not seeing the inventory rise. Those homes for sale go up, and so that's why we are not seeing a softening of pricing or any major shift in the market. It's just subtle. I also think that once we start getting some more inventory on the market, we might also see a corresponding increase in sales activity because we have a lot of buyers that still want to buy. They just can't find the right home to buy. So if you're thinking about selling and you're not wanting to miss out and time the market wrong, I don't know what the market's going to do tomorrow, but what I do know is today it's still an incredibly strong seller's market. I don't think it's the greatest seller's market of all time. I think that was actually 3, 4, 5 months ago, but it's still an amazing time to sell. And when you put that in historical perspective, it's still one of the best times in the history of modern real estate today for the sales outcome you could get for today. Sales price in Montecito and Hope Ranch, about $4.6 million for an average sales price. And here's crazy. We have a very, very low average days on market, even for Hope Ranch in Montecito. Those luxury areas usually take quite a bit longer than the affordable market, and we're seeing those just sell at a rapid pace. The months of inventory is a little bit higher than the affordable market, but that's not uncommon. Normally, the months of inventory might be 2 or more times as large as the affordable market. So the fact that it's only 1.7 months of inventory is still just incredibly strong. Now I'm going to go over the year-to-date sales activity. This is actually more important because it's a larger sample size, and I think it gives you more accurate, kind of a true accurate sense of what pricing has actually done. So when you look at single-family homes, the average sales price year-to-date is just over $3 million, which is a 42% increase over last year, year-to-date. The median sold price is just under 1.9 million, and that's a 27% increase over last year when you look at the year as a whole compared to this year as a whole. Condos, I mentioned this a lot in my previous monthly market update, so I'm not going to rehash that, but we have seen we've seen a disparity between single-family home appreciation and condo appreciation in the last 12 months, unlike we've ever seen in Santa Barbara. Normally, they have tracked fairly similar in appreciation and depreciation rates over the years and decades, but in the last year and a half since COVID, we've seen a massive difference in pricing appreciation. You can see that reflected here. 27% increase for single-family homes and only a 15% for condos. Still a great appreciation rate, just not quite as dramatic. And the average sold price, a 42% increase versus a 9% increase. So there you have it. So again, as a summary, very strong market still. I still believe we're going to see a little bit of an equalization. Very, very hopeful we're going to start to see inventory levels rising soon. We desperately need that additional inventory, which could increase that sales volume. And I just think we're going to continue to see some healthy appreciation. But at some point in the coming months, that is going to shift and start leveling out. But the big indicator is that absorption rate. We need that absorption rate to go up and balance out into an equal buyers and sellers market until we're going to start seeing things like, price depreciation and things like that. Now, with one caveat to that, in the last peak of the market, when it was like 2005 to 2007, some people will say it's 2005, some will say it's 2006, some will say it's 2007. The reason why they say that is when you start looking at the data, 2006 looked kind of like it was the peak, and then, 2005, and then 2006 happened, and prices actually went down. That's why they thought 2005 was the peak, and then in 2007, prices kind of went back up, and then they started to really significantly decline after that. So it's almost like it was a 2.5 year, kind of pause. What's going on? Is the market going up? Is it going down? Has it turned over? Is it still appreciating? And I feel like that's kind of where we're going into, is we're kind of in that kind of top of a market cycle, and we don't know how long that's going to carry over, if it's going to go up a little bit more, if it's going to start equalizing, if it's going to go down a little more. We won't know probably until a couple years, and we look back and we say, oh, it really was, this kind of range, and this is what actually happened. So that's all I got for you today. I hope that you found that helpful. If you want an in-depth, private, confidential consultation so we can help you come up with a strategic plan, please do reach out to me or your preferred Zia Group Realtor partner. We're happy to do that. It's complimentary, and we'd love to be your real estate advisors for life and your local real estate economists of choice. So thank you again, and we'll see you next month.